welcome. This is Dolly Lopez, your realtor and real estate broker in the state of Florida and Kentucky. Today, I am joined by Rob, one of my favorite financial professionals. Welcome, Rob. How are you doing today?
I'm doing great. I'm excited to be here with you.
I'm really happy you're here. And for everyone that don't know you, because you're very well known in our community, in Louisville, at least.
Yep.
So can you introduce yourself? What is it that you do? How many years you have been in the business? And then we'll jump right into our topic today, which is about what do you do after you get a mortgage? How can you protect your asset?
My name is Rob King, and I work at Northwestern Mutual. I've been doing this for 20 years, and I'm located in Louisville, Kentucky, but we work with people in about 35 different states. So that includes Florida, as far north as Michigan, as far west as California. So everywhere in between.
You cover quite a bit. You do. Let's jump right in.
Sure.
What homeowners purchase their first home or second home? How can they protect their investment beyond that closing table? You do inspections and you do appraisals and you do all of that. But after the fact, after that closing table, what do you suggest people to do from a financial perspective?
It's a really good question. And it's interesting, you do all that protection on the front end. You get to the closing table. If it's your first house, you're really excited. You finally get done. You finally get to walk through the front door and you think that's it. But that's really the beginning. And if you do any type of research, you'll find that there are a lot of studies on, unfortunately, how people lose their houses, right? So it could be from a premature death or a disability. And so from a financial perspective, you want to make sure, hey, now that you've got this asset that you intend to transfer to the next generation and build generational wealth, you don't want to lose it along the way because life can throw you some unforeseen circumstances. So one easy way to do that is picking up enough life insurance to cover the mortgage on that debt. And so there are two types of life insurance contracts out there, one that's called term insurance and one that's called permanent insurance. Term insurance is temporary, meaning that you have it for a temporary amount of time. It could be 10 years, 20 years, 30 years. There are some that last until a certain age. If you've got a 30-year mortgage, it makes all the sense in the world to get 30-year term insurance. So then that way, when the mortgage is paid off, your life insurance also goes away. Does that make sense?
No, it definitely does, because at the end of the day, that's how we have it set up for my family. That's how you set it up for us. I want to make sure that my asset, my mortgage is protected just in case I go before my time and the mortgage is not paid off. At least that term insurance, which I think is a little bit cheaper, normally, it just covers my whole mortgage. And that's important to me.
And typically term insurance, like you said, is cheaper than permanent insurance for a reason, right? It's only bounded to a certain amount of time. And really what it's designed to do is to make sure, hey, your spouse and your kids get to stay in that house, grow up in the neighborhood that you intended for them to grow up in, and stay with their friends, their school, and all the other things they built into that lifestyle.
Good. So now let me ask, whenever people buy houses, they normally start getting letters in the mail and start saying, get your mortgage protection or your, accident protection. I don't know what there's a bunch of letters that people get at their home, but it's mainly a life insurance for that mortgage. And I normally tell them, don't even bother looking at that. Go with a financial advisor who can actually guide you, look at everything that you have. And normally I find whenever they go to a financial advisor, I have been doing this for over 15 years. So I have experience and then see people doing it. And normally I found that whenever people go to a financial advisor like yourself, it's a little bit cheaper, more comprehensive. It covers a little bit more, but I still don't know why these letters are being sent in the mail. So can you talk to me a little bit more about it?
Sure. So you got to be careful, right? When you buy a house, all of a sudden your name gets listed on all kinds of different databases, and it's really easy to flood your mailbox. So you got to be careful for two reasons. One, some of it's just marketing, right? And you don't know what you're really getting. The devil is always in the details when it comes to insurance contracts. And so you got to be careful of something called an exception. What an exception is a reason the life insurance company won't pay a death benefit. Some companies have more exceptions than others. So you really got to be careful about that. The second thing, which I always tell everyone, is today there's this notion that you can get everything through the internet. When it comes to life insurance and disability insurance planning, I'm a huge proponent of having a person across the table. Now, It doesn't have to be me. It can be anybody else. But in the moment you need to use those resources, is really, really imperative that you have a relationship where you can pick up the phone and call and say, hey, something has happened. I need some help. And it's really hard to pick up and call the internet in those moments.
That is true. Now, Rob, what happens if I get disabled or
Yeah.
I am temporary? And it actually happened to me, by the way. So I was pregnant with my twins, and I'm like, what do? I didn't have the income. I could barely walk. So I didn't have that income. What do you recommend
Mm-hmm.
for that? How can you protect your mortgage on those type of situations? And it's just temporary.
Mm-hmm.
So
Yeah. So, Dolly, one, thank you for the transparency. We really recommend that everyone has some form of disability insurance outside of their employer. Most W-2 jobs you have will have some form of disability insurance, but it's usually limited to like 60% of your take-home pay. And if you have to get that, it's going to be taxed. So at that point, it's probably 48 or 50%. You can actually buy a supplement to go on top of that. If you're a 1099 or self-employed person, you don't have any group disability insurance, and we can probably get you close to 80 or 85% of your income tax-free. And the reason that's so important is if you're out of work for any period of time, you still need a place to live,
Yep.
right? There's a fallacy that if I'm not working, I'm going to cut my expenses. Well, things like the mortgage, the car, if you have any private school tuition, you can't just drop those things next month, right? Those things have to continue to go on. And so having disability insurance can actually pay you your income or a percentage of your income for a period of time until you can get back on your feet.
Yep, and that's what happened to me. And Rob definitely helped me through it. Thank you so much. Now,
You're most welcome.
and one of the things that you did mention and you touched on that I want to revisit is I do hear sometimes people saying, I have life insurance through my job, and that's good and sufficient. But I question myself. I had insurance through my job. I decided to start doing real estate 15 years ago. But back then, if I would have gotten my life insurance back then, I feel like it would have been a lot cheaper. And even though I'm not paying expensive insurance because I still got it within a good, a good certain amount of time of my life that I was still a little younger. But I just feel like, what would you say to those people that I have disability insurance through my work and I have life insurance through my work?
It's tough because when you're young, you don't know what you don't know. And oftentimes, in your situation, you voluntarily left and you couldn't take your group life insurance with you. There are times where employers say, hey, you know what? The benefit's too expensive. We're going to cancel it. And then you don't have any, right? So I always tell people, get something you can control. Life insurance rates are based on age, health, and sex. I know you're as young as you're ever going to be, right? I also know you're probably as healthy as you're ever going to be. So the best time to get life insurance was probably yesterday, but we missed that. So the next best time is today. So make sure you get it so you can control it. And at some point in time in the future, you decide, hey, I don't want this. Ultimately, if you get to a point where you decide, hey, I don't want the life insurance anymore, you can let it go. But if a company controls that, say 10 or 15 years from now, and they cancel your life insurance, you're automatically older, so it's going to be more expensive. If your health has changed, you might not be able to get it at all. So get something you can control so you make all the decisions.
Completely agree with you on that. And that's what I keep telling people, but I feel like I'm selling more life insurance than I should because I am not licensed. I just truly deeply believe in it. They don't teach us these things at school. We just have to learn it how we learn it. You got the info. Rob, if they wanted to contact you, what would be the best way to communicate with you?
Listen, we're everywhere. So my email's down at the bottom of the screen, but we're on LinkedIn, Facebook, Instagram. We're all over the place. My name is Rob King III, and I'm with Northwestern Mutual. So rob.king at N as in Nancy, M as in Mary.com. Feel free to shoot us an email. If I can't get back to you, someone on our team can. And like Dolly said, it's really, really important to have something. It doesn't have to be with us, but get something. If you work really, really, really hard to buy that first house, I'm sure Dolly can attest to this. It's really painful when someone calls us and says, hey, something has happened. Either I can't work or someone passed away and they have to sell their dream home. So this is a really way to ensure it and protect that asset.
I normally say whenever you plan for your mortgage payment, try to budget a little bit more for that extra little cost for the extra insurance that you need to have. For me, it's more of a need rather than a want. You pay for car insurance and hoping that you're not going to get into a car accident, but it's a must. You have to. So why wouldn't we protect our biggest asset? This is our home. This is where we're going to be raising our family. So anyways, so thank you so much, Rob, for all of this information. I really hope to have you on board, sometime in the near future. Guys, remember, we're here to assist you in your journey to success in the real estate world or in the finance industry altogether, to educate you and give you some tools for you to make informed decisions. Thank you, guys, and I'll see you next week. Bye.
See ya.